Hello there, my theorist friends. This is Neil from Option Theory. Welcome back. I do not have a cherry bomb in this video, but the next video I'm going to make will be the cherry bomb for today. So if you're seeing this one before the cherry bomb, no worries. I was just preparing to do the cherry bomb, and I'm like, you know what? Let me make a video on this. So if you're interested in seeing how I'm going to try to manage an iron condor, which isn't something I always do. I tried it once, burned me, but I'm going to give it a whirl. So if you want to learn how to try to manage a defined risk trade like an iron condor, then stay tuned. We're going to go through that process right now. But before I do so, of course, I just want to introduce myself in case this happens to be the first video that you've seen from Option Theory. So normally we do videos where we trade trades that we get in an email from Tasty Trade. This, of course, is one of those trades that we need to manage. So if you like doing that kind of thing with us, getting the same emails, putting the same simulated trades on to practice your theories, then hit that subscribe button and ring that bell. If you don't mind, that'd be amazing. Maybe if you like it, by the end of the video, if I've earned that like, hit that like for me, please. All right, with that said, we're going to move on and take a look at the trade. So I'm inside, of course, ThinkOrSwim in our simulated trading portfolio. I'm in my margin account. And of course, I've been looking at the trades that we have on. I took off 2 yesterday, and I put that, let me see if I can drag that on screen briefly for you. Here is my Trello trade journal, which I could try to put a link in the card up there for you. There it is, if you saw it there. There's that card where we go over how to build out a trade portfolio like this. So we can see these are the 1, 2, 3, 4 positions that I have on right now. Hopefully those will match what I actually have over here. 1, 2, 3, 4, 5. I have something missing. What am I missing? Microsoft. Oh, you little devil. All right. So Microsoft seems to be working out for us, which is good because it owed us some money. But anyway, that's not why we're here. That's not why you're here. You wanted to see something else. So let's do that. Twitter here is about to expire here in 3 days, which is not the opportune time to roll a trade. But you know what? I think you might be surprised what we're going to get here. So you can see here that we're going to go over to the Analyze tab. And Twitter here, we got a 49, we'll call it 50% chance that Twitter comes back into this profitable range here, which we could stand to make up to $89, right? However, there is also a 50% chance it's going to go over that. And right now we are beginning to lose money in Twitter. And assuming that NASDAQ here is going up another percent-ish, right? This is going to probably begin to lose some more. And we might take a full max loss of $111. Not a big fan of that. I'm going to try to manage that. So back over to the monitor tab here. I want to roll these puts. So I'm going to click on the first put, hold down the shift key, and now I've got these 2 puts selected. I'm going to right click and choose Analyze Rolling Trade, and I want to sell this vertical roll Twitter here. What it's going to do is assume that you want to roll out in time, and that gives you this wonky graph here. I want to keep the same expiration. I only want to sell out for the remainder of the 3 days, but I want to roll my put vertical up to here, right? So we're you'll see what I mean. All right, over here, we want to take these strikes to where the short put should be the same as the short call. So we're going to take that up to 36.5. And then because it's $2 wide, I want to take the long put $2 lower than that, which is 34.5 or 34.50. That means we collect an additional credit of 74 cents. And if I move my break evens here, set slices to break even at expiration, you'll see we're looking at of course we're reducing our probability of profit, right? However, that's not that much of a reduction. To be at a 43% probability, and by the way, the additional credit means we're no longer, in 3 days, we're in a profitable region. Yes, if we end up right here at about $36.44 for Twitter, we'd stand to make $154. That'd be awesome. But also the other news is, which I think we'd all be concerned with, taking a max loss here means we'd only have a $37 loss versus $111. So with that said, I'm going to right click this trade and I'm going to hit confirm and send. And a review, of course, max profit, max loss. We know that that's not the case. We know what the real deal is here, right? Okay, so I'm going to head over here and hit send. And that's going to go over to my working orders. And we're going to hope for the best on that one. So, as I said earlier, that was us managing a Iron Condor defined risk trade. Normally, according to Tasty Trade, the data show that you want to manage closer to the 21-day mark. However, we're going to see how this goes, right? That's why we do this simulated trading. All right, everybody, thank you so much for tuning in. I will suggest that you watch the cherry bomb video, which will be coming out today as well. So I look forward to seeing you in that video. Thanks for tuning in.